Hi, and welcome to the Trading Pit, my personal investing tools and techniques for the individual trader. My name is Lundy Hill, and this is my weekly market update for commodities, futures, stocks, and cryptos. Please note this is not investment advice. Past performance is not necessarily indicative of future results. So here is my weekly update of active commodities, alternatives, and the stock market charts that I find very interesting. We're going to start off with my performance review. This is the 52-week performance table, unlike last week where I did the 2025 table. This is performance for the last 52 weeks of stocks, bonds, commodities. Stocks as measured by the ES futures over the last 52 weeks are up 8.1%. Bonds are actually down about half that. So the bonds are hurting the 64 portfolio and have been for the last 3 or 4 years. The top performer for the last 52 weeks is natural gas, and it's up an amazing 130%. This performance is followed by coffee, which is up almost 100%, up 99%. Still amazing. And next are the precious metals, which are both up, silver and gold, which are up nearly 40% for the last 52 weeks, with gold making consistent new all-time highs frequently over the last few weeks. Cocoa, on the other hand, has stalled its move, and it's fallen 19% over the last 12 months. And crude oil, with drill baby drill, is actually down 14% also for the last year. Now let's go on to the charts. First up is the ES futures chart. Last week I highlighted an L formation down. I did this with the NASDAQ chart, but it also equally applied to the ES and the S&P 500 chart. Prices rallied to start this week and had me concerned for that call of an L formation with lower prices. Then Wednesday, prices dropped dramatically, and this formed a 3-bar equilibrium down, which is 1 bar up, a stall bar, and then a down bar. This was followed by a much bigger drop over the last 2 days, Thursday and Friday. Today is Friday. I expect prices here to keep going down and test these recent lows, finding support at the high of that low bar around 5,600. Actually, that's about the open area, but 56 to 5650 range, or the actual low, which is around 5,500. If those levels break, I would expect another wave down below 5,400, possibly down to 53, 5,200. Next, let's go to crude oil. Crude oil is showing a very similar pattern. It has rallied over the last few weeks and has ended with its own 3-bar equilibrium down pattern as well. Wednesday was an up bar, Thursday was a sideways spinning top bar, and then Friday was a down bar, which reversed the entirety of Wednesday's up bar. Also, Friday's closed finished a 4-close reversal pattern. This is one of my 9 patterns that signal a trend change. So I expect further downward action here, finding support around the 6,700 level or possibly lower down to the 66 level. Of note, something to give pause to expect further downward action in prices are the rallies. I've marked the last four of the biggest rallies. You've got rallies 1, 2, and 3 in late January and early February, and then you've got this current rally. You can see rallies 1, 2, and 3 are equal length, about the same length, and then 4 is about 1.5 times as big. So this most recent rally is bigger in price and time. So I personally expect prices to find support around these lows of 66 to 6,700. Next, let's go to copper. And are you ready for yet another 3-bar equilibrium pattern down? This time in Dr. Copper, The sentiment indicator here hit the stocks and commodities with equal vigor today. That number came out from the University of Michigan. And I mentioned last week that copper reached its wave target, which it has, and that was marked at about 514 last week. I also noted that the two tail bars that ended last week showed positive price action for this week. Well, I would say I was right on both counts. I think the market might have hit its peak, and I think those two last Thursday and Friday of last week did show continued upward price projection there. So price did rally from those two tails. However, it quickly formed another three-bar equilibrium, peaking out around 5.375, and then dramatically reversed and closed below the midpoint of Tuesday's up bar. Thursday closed below the midpoint of Thursday's up bar, and that is a classic definition of a three-bar equilibrium. I believe the buy zone is still intact. I believe it will be reached, but I will not buy it on a limit. I will wait for some kind of pattern to signal a trend change from down to up. Next, let's go to cryptos and Ethereum. Ethereum has had a wide double top here over the last 12 months. This this is a weekly chart. Prices this month have broken the lower pivot between these two tops and actually held down there. This is forming an L formation down. Prices closed near the lows this week. So that makes me expect lower prices going forward. This double top is dramatically huge. It spans over $2,000. I expect prices to test and break the 2023 lows, which are shown at 1,500, and go even lower than that. Can they reach 1,000? I don't know. Next, let's go to Bitcoin, the granddaddy of crypto. And the price action down in Ethereum, I believe, is also mirrored in Bitcoin. Bitcoin had a multi-day close reversal today, down dramatically from almost 88,000 down to 84,000. And a major trend down. This came at the top of the channel, which I've highlighted in red, which has been working since mid-January. I expect prices to reach the lows below that 80,000 point, which we see back at the end of February and early to mid-March. We see those two lows between 76 and 80,000. I expect at a minimum prices to reach those levels around 80,000 down to 78,000, and possibly extending down to the lower channel of 72 to 74,000. Something to note here, we've got stocks going down, we've got housing going down, we've got crypto going down. In a panic, with stocks, housing, and crypto all crashing, I've heard it said that people don't sell what they want to sell, people sell what they can sell. And I believe the first thing to go will be crypto. Next, let's look at a meme stock in another one of my 9 patterns here. This is GameStop. Since mid-March, prices have been rallying off the lows just below $22. This rally culminated in an exhaustion gap up on Wednesday of this week. Prices closed below the open, though. This was a hint of the end of the move. Thursday gap down back into the range of Monday and Tuesday. This hinted that our number 1 of 9 patterns that signal a trend change, the island reversal, might be in play. And sure enough, prices fell dramatically on Thursday and were unable to post much of a rally today. So I expect more downward action here. Now I want to show you a beautiful chart on gold. Gold keeps making new all-time highs. And how do you play it? Well, I want to show you a beautiful chart pattern my father loved. He called it the dynamite triangle. The dynamite triangle is a tight coiling up of prices after a move. Here I've got it after an up move in gold. I highlighted in green 3 smaller ones and then also 2 larger dynamite triangles here. I suggest you chart these on a 4-hour bar to really catch the waves. Wait for an ABC reaction and then the D wave up. Then put a buy limit order just above the C low, and you have a stop below the dynamite triangle low. This is for educational purposes only. This is not investment advice. If you go down to the 4-hour chart, or even if you look at this chart closely, if you chart this a lot more closely, I think there are more than 5 dynamite triangles I've marked here. See if you can find them, and if you can, please comment where you have on below. Thanks for watching. Please like and subscribe. If you have any recommendations or suggestions, I will gladly listen to you. Thank you so much.